weekend. Ira Epstein of Linn & Associates with your weekend edition of your SPDR ETF wrap-up, and this is for Friday, the 14th of August, 2020. Can you believe it will be in September soon? Wow. All right, as we take a look at the market, everybody was waiting to see if new high closes were going to happen in the SPY, and I'm talking the S&P, obviously, and no, didn't quite happen. QQQ stable. We were just nowhere today. The markets didn't get their big hurrah. They may not. You know, we're up in an area where sooner or later you might say, hey, we made a double top. Be wary of that. Very. You've got to have your eyes open. Markets that come up and keep knocking on the door and don't go through it, an old high, could be a market that you start that rounding top formation, and I want you to be careful and open your eyes to those things. Don't be one-sided. If the market makes the new highs, let it keep going. Then you know you're not doing that. Right here's a danger area. We've seen a big correction this week in the gold, the silver market. We saw a change also in bonds and notes. For the first time, yields in a long time started really climbing. And if you missed out on your refi on your mortgage, well, the way they're going, you're not going to be able to get it. They're adding some more fees to that. That's not a good thing. And of course, we still have the COVID issues, and making matters even muddier in parts, the Chinese trade deal got last minute, the Chinese backed out of that summit. Virtual summit that was supposed to be between our negotiators and them to see how they're doing so far. We know they're well behind. What I do know they're buying are soybeans. They bought today about 20 million barrels of oil for the delivery time of August through September, as I understand it. That doesn't give it enough buying to get them where they want to be. We'll see what happens. At least they're buying something. When we take a look at XLK, markets like to fill gaps. You haven't filled it yet. In order to fill that gap, you got to drop down to 110.47 on the weekly chart, and you got as low this week as 111.15. So the pattern is still bullish. We don't know if that's a breakaway gap, the jargon in the business, or not. What we do know is the market has a pattern of higher lows and higher highs. This is the swing line. If you took my charting course, you'd learn that you look at it this week, there's 5 rules that set it up. You have a higher high week, a lower low week, an inside week, an outside week up, or an outside week down. For those of you that are chartists, this all made sense. Then I apply the rules, and I teach you how to do it by hand, but then we put it right into our charting software so you can see it. What it tells me in a quick look is the market trending? A trending market, if it's an uptrend, has higher highs and higher lows, and they're marked off on the system. To break that trend, you'd have to take out 100.31. So that's the risk associated with it on this current pattern. I look to see where the market's at in relation to the 18-week average, the 100 and the 200-week. The main number to me is the 18-week. That is my barometer to tell me when the market's over it, I should have bullish bias. When it's under it, I should have bearish bias. If the market's over it and it breaks, it's not uncommon that the market tries to go back to that number, is what I call the line in the sand, to see where it's going to go next. Then you look at other parts of the indicators. Another indicator to me that is exceptionally important are Bollinger Bands. I mean, I hang my hat on them. I'm looking for them to give me guidance where resistance is going to come into a market and support. Not for buying, for the purpose of coming out of longs and out of shorts. Got it? Complete difference than most people would look at it. I also look to see, is the market marrying that? In other words, is it riding it? If it starts riding it, it's another set of events, and often it's accompanied by the slow stochastic study locking itself in, just like you see there. When that indicator starts correcting, the market often corrects with it, and this will typically give a small lead time to price. Could be a day, could be more. Can they be the same moment? Of course, but normally it'll give you a bit of a lead time. And what this market told me, it went up, met that upper Bollinger Band. You got up to that week to 115.57. The band number was 115.30. that should be where resistance comes in. And you've got your problem. That is not bearish. It's resistance in the market. I think the pros on a rally like this took money off the table. That gives them buying power if they want on the downside. Something else happened in this market. Whenever you look at a market, and you should learn how to work with outside days. I have theories on them. Doesn't mean my theories are right. And I teach all this in my charting course. But if you take out the high of an outside day down within 2 sessions, in other words, this is a weekly chart within 2 weeks. You did it the very next week. And I realize you came down like that. You got to be careful. Because if it comes back over that high, this is an unusual circumstance, but I have a rule for it. My rule is you're going up to the closest moving average above the market, they're all below me, or the Bollinger Band, or I'm wrong if you get back under that low right there. I'm not the only one that sees these things, but I'm probably the only one that explains them. I wish I knew why it did that. I think people get caught. Momentum locked in, trend up, you've hit an upside target, ready for potential setbacks. Same thing in XLI. Why would I tell my clientele to buy an upper Bollinger Band? I never would. Remember Ken Fisher? I'd never have you do that. Well, I agree with him. I didn't agree with some of the things he did, but I do understand what he was saying. And I would never have my clientele buy a Bollinger Band because the odds favor that when you get to these bands, there's corrections. For the one time it keeps going on you, or, I'm giving one being facetious, how many times does it give you the right thing? That's what it's about. And nobody is telling you when you get there to go long. The trend is down. It's a question of, are you taking money off the table? Sometimes you're too soon. So what? In the futures market, there's always another trade. And let me explain that. This is not the stock market. When you're trading ETFs and SPDRs, you are not stock market trading. You're not investing in companies per se. You're investing in indexes of them, SPDRs of them. It's different, and it's meant to be traded, in my opinion. I cannot tell you what others think. Okay, that's my take on it. And you're up to an area where I could see how you pull back into this zone. Momentum's up, trend is up, bias is up, but you hit an upside target. In the energy sector, it's pointing up. You've got higher lows, higher highs. I think the pros are buying the market at 37.54, and I think they're wrong. I think they'll say they're wrong. In fact, if it hits 35.30, 35.29 actually, you got to get under that. Why? Well, if momentum can turn here, they've already got bias up and the trend up. So if momentum can join them, away they go. In QQQ, the trend has been up and you've had market locked in momentum to the upside. You can see the constant higher highs, higher lows. It's fascinating that since March, the big break, you haven't gotten back up to the upper Bollinger Band, and prior to that, that was the norm. So do you look for the Bollinger Band? Not completely. You've got to look at a couple of other things. On markets like this, you might want to look at, well, it's in my charting course. In the EFA, which is the emerging markets, the trend is up, higher lows, higher highs. You're fighting at the 200-week moving average of closes. We've exceeded it. If the market can get going from here, 66.74 the next target, momentum up. I think the bulls are right. I think this market's being controlled by them. And I look for support on pullbacks to the 100-week moving average. Got it? So I still see upside. The gold market. We were up on gold over the Bollinger Band 1, 2, 3 weeks in a row. I teach, and you've heard me say it if you're a regular viewer, I count each successive close over a Bollinger Band or under it is taking away one of the 5 percentage points. The key is successive. So that takes away 1, so I've got a 4% chance of staying over the Bollinger Band the next week, now a 3% chance, now a 2. All it's telling me is, number one, the market's quite strong, but number two, it's going to correct at some point under that band. There it is. I'm concerned here because momentum's trying to turn down. So instead of momentum staying strong when you had a correction like you did here, which wasn't over the Bollinger Band, you may lose that. And that means there might be a deeper break coming in the gold than you think. And it doesn't have to change the bigger trend. It's still bullish. GDX, I know I was very vocal about coming out of longs against the upper Bollinger Band. I was on my dailies and this, and it paid off. So now the question is, on this, we're going to jump in that 18-week moving average. It's been running right now about 60, 70 cents each week. That should put it very close to 36.87 on Monday when they reopen. Momentum has turned down. For me, I'd stand back and let's see what this week holds. I'll be covering this on the daily subscriber videos for you, and that's what we do. I'm not enamored with it. Silver market, you know, anytime you get SLV doing this, and I just want to show you, this week you're up $3.20. This is a market that prior to that was $19, so it's a 17% gain. You just add the week after another 7%. Now you add 15% more. Do you not think there's a number? I know when things go, people think it's going to the moon. Going to the moon. In futures, that move, futures, and it was the same way, it was $40,000 on a margin of maybe 8 to 10. But you're going to get a correction. I know you don't believe me, it's going to step in. And the game isn't trying to pick the correction. The game is this market's doing that. If you're long, peel off. Now, you can do it a number of ways. If you own a full-size futures contract, you can get out with some of the smaller ones against it. If you're in these spiders, you can sell parts of your position. They're letting you do anything today. The commission's free. Play the game. But that's what I think. You want buying power. I'm not saying this market is topped. I am saying it's due for a correction. There's a very big difference. TLT, all of a sudden we're back underneath the 18-week average of closes and momentum turned down. You've gone into a sideways pattern. I can see that the trend is up on the swing line, but the bias is down and momentum is down. This market changed its nature. Let it figure out and tell us what it's going to be. FXE, still bullish. Now, this was a market that got ahead of itself, but then it pulled back to the right-hand side of the Bollinger Band. That's what you're looking for. So if you're looking for these type of things, number one, you know, Sunday, I'm having my webinar. We have just a few seats left. This is the most full that one of mine have ever been. You have to pay to get in. It's not free. It is to my subscribers if they registered before noon today. Then I open the seats up. They have to do it when I tell them by a certain time. And after that, the seats open to everybody. Everybody pays. The subscribers to my service, that is free to them. So let's assume you go in and you're playing here with my work there for my ETFs. On the ETFs, what I do with you, I record every Monday through Friday an ETF video that's about 20 to 25 minutes long. I cover 36 charts right now. I give you specific buy and sells off the daily charts, what I think you should do. It's meant for swing traders and traders. It is not meant for the longer pull. My weekend edition is, and I will record that on Saturdays, and that's based on weekly charts, and that's for the longer term trader. If you go to our website at www.iraepstein.com, under the word research, it's all there. I hope to see many of you this coming Sunday in the webinar. Check your mailbox. If you've applied for information with us before, you got an invite. Check your junk mail if you missed it. And you can register. It's 5 p.m. Central Time. I'll open it up for everybody to get in probably between 4:30 and 4:45 so everybody gets comfortable with what they've got. And then at 5 we'll begin. Bring your questions. Bring your symbols of stocks, spiders, whatever. We'll open them up and see what we can do. I'm Ira. You have a great day.